Hey, what's going on? Welcome back to video number 2 in our 4-part training series, How to Dominate Any Real Estate Market. It's your boy, Cody Sperber, the Clever Investor here, and I'm excited to keep the conversation going. All right, in today's training video, we're gonna cover the 6 steps to being able to complete a deal directly with a motivated seller. All right, we're gonna do steps 1 and step 2. Step 1 is finding your target market, and step 2 is finding those motivated sellers within your target market. We're also gonna talk about tracking your KPIs. All right, and if you remember in the last video, we talked about the 4-square strategy matrix, the biggest challenges new real estate investors face, and also how to evolve as a real estate investor. So if you haven't watched that video yet, go back to part 1 and watch that. But in today's video, we're going to keep that conversation going. We're going to talk about the 6 steps to closing a deal directly with a motivated seller. We're going to cover steps 1 and step 2, and I'm done talking. Let's dive into the training. So in this world of residential real estate investing, there's 2 ways to get deals, right? Going directly with the motivated seller or going through a real estate agent. When you go through a real estate agent, what do they do for you? Nothing. You got a crappy agent. Good real estate agents do a lot for you. Good real estate agents. And they're out there, I promise you. There's a lot of really great real estate agents out there. You don't believe me? That's okay. You just haven't found the right one. When I first got into business, one of the biggest myths was, is wholesaling legal? I did not know the answer to that. I got mixed messages. You know, somebody told me it was, somebody told me it wasn't, somebody told me they were doing it, the next person said that they got out of the business because they were told it wasn't allowed. So I went to an attorney. Guess what the attorney told me? That ain't legal. Can't do that. I went home just a mess because I had hopes and dreams that this thing was going to work for me. You know, and it's that white coat theory where that person is perceived as an expert, that could really crush some people's dreams. And I realized that they were wrong, okay? And I got back out there. Somebody told me, no, that attorney's full of crap. Go back out there, and an investor referred me to one, and he said, yeah, not only is it legal, here's my paperwork, right? And then he said, go to this closing agent and work with them. And all of a sudden, things started clicking and coming together. But if I would have listened to that real estate, or that attorney, or the first couple of realtors I talked to that said, we don't do that. I don't work with investors in that capacity, right? Because I was asking them to go find me deals on the MLS that I can wholesale, okay? I would have failed and I would have quit long before I got going. So good real estate agents are out there and they do understand the business. They understand how to search for deals off the MLS, and they're going to do everything for you. They're going to find the deal, they're going to negotiate it, they're going to write the offer, they're going to get the offer accepted, they're going to work with you through closing. They're going to hope, try and get you to connect them with whoever gets it on the back end so they can list it after rehab. I mean, they're going to work. So we don't really want to talk too much about that, even though we do get probably about 50% of our deals off the MLS right now. Maybe 40. It depends on the month. But we're getting good deals off the MLS. They're out there. But the rest of our deals come from directly from the motivated seller. So I want to focus in on that with you guys. Who here wants to crack the code on going directly with the motivated seller and getting deals that are off market, and where do you think you're going to find your best deals, realtor or direct? Direct, okay? You're cutting out real estate agent commissions. You're cutting out somebody else negotiating on your behalf that might not be as good as you. Understand the process, okay? So here's the 6 steps. You guys can write these down. Targeting your market and property type. You got to know what you're focusing in on. You got to understand how to generate the leads and find the sellers. You want to be the person that they call when they say to themselves finally that they're ready. Once the lead's generated, you got to do due diligence and circumstance analysis. Then we got to focus on acquisition. What happens in acquisition stage? Negotiations. Yeah. Who said that? You look like an awesome dude that would wear a cool, clever investor hat that matches your shirt. Ready? Hey, thank you for playing full out. Appreciate that. You guys are going to answer some questions now, right? We have some cool stuff up here hidden. I got T-shirts and hats, and I have these little things, these little golden tickets. You guys want some VIP access to some private parties and some other stuff that we're doing? You guys got to play full out, all right? All right, so that's in the negotiation phase. Then we got to figure out how we're going to fund it, okay? There's different ways to fund it using all kinds of different strategies. We're going to break that down. Franklin's going to go through a great training on raising private capital and how he does that. And I think maybe Tom might actually touch on that at some point. I mean, we're really going to dive in on that topic. And then strategy implementation. That's where we're going to figure out, are we going to wholesale? We got to start setting up all the pieces to be able to do that. If we're going to rehab, we got to start doing, where there's certain things that we're going to be doing in the negotiation and in the process of closing to get prepared for that. Because once you actually fund the deal, okay, that's when the clock starts ticking. So you want to get as much done of the prep work ahead of closing as possible. All right. So when you see this up here, you can see that there's different segments of a market: war zones, working class, middle income, upper income. Can you wholesale in upper income? Yes. Absolutely. Can you do it in war zones? Yes. Could you rehab in war zones? Should you rehab in war zones? Only if you are really dialed in and part of that community. If you're part of the community, if you're in it, meaning like you know them, they know you, you got a shot. We sell properties to some Hispanic wholesalers and investors in South Phoenix that you would not get out of your car. They smash. They buy hundreds and hundreds of houses. They got a whole model and a system that works for them. They know everybody in the community. Nobody jacks their stuff and beats their houses up. They know what's going on. And the community leaders are supporting it because they want the revitalization of those neighborhoods, right? So if you're in it, it's cool. If you're not in it, I wouldn't do it. I'll tell you guys a story. One time I actually bought my own stove back after it got stolen the night before at the local used appliance store. Funny, but it's true. Sucks when it happens. All right. So you pick your area. What would you say the highest probability for making good money? Which of these segments? Working class. Why? More people, more affordable, right? People who have cash can afford to pay cash for these types of properties. Is there higher profit margins in them? No. Upper income. Upper income have the biggest spreads. Altman's going to get up here later and tell you some more stories. I mean, like, we're talking about the unicorn of the investing world, Beverly Hills, which is, like, not normal, right, for most people. But, I mean, like, they're making millions, if not tens of millions, on a flip. It's insane what they're doing there, okay? But, you can make a lot of money doing in all different properties. I like to focus on working class. I'm going to introduce you to Josiah, who's my business partner. He focuses mainly in that area just because that's where the largest segment of cash buyers is. So finding motivated sellers, there's a lot of different marketing strategies out there, and we teach a lot of these things in depth to our students. Do you need to do them all? No. You got social networking, you got online marketing and SEO and offline marketing and traditional marketing, okay? So out of all of these different ways to find sellers, what's a great free way? Social networking? On which social network? Facebook. It's a great connector, right? You got direct messaging. If you had a formula to actually automate that process where maybe a virtual assistant for $3 an hour was copy and pasting and going after different groups within your local area, yeah, okay. What about, somebody said driving for dollars, did I hear that? That's a good one. Craigslist, direct mail, if you know how to do it right, that costs money, but it's actually probably the most affordable way of generating leads next to Facebook ads. Word of mouth. Relationships, bird dogging, and then co-wholesaling might be in one of those. Do you guys know what co-wholesaling is? Who doesn't? Okay. All right. I'll get to that here in a second. All right. There's a lot of different ways to generate leads. I'm not going to get into this right now. We're going to have training later on in the weekend on some of this stuff. But just understand that once the lead is generated, we're looking for a specific type of person or a specific type of property. And you need to have two things in order to make a deal work with a motivated seller. Okay? The first one is motivation. So we're looking for a distressed property or a motivated seller. Okay? The other thing is what? So once you identify, both of these are motivation triggers, right? So we got distressed properties. We'll go over what that is. But what's the other thing you need besides the motivation? Who said that? What was it? Equity. Right? Yes, you can maybe negotiate a short sale or something like that, but if you find somebody with motivation and equity, you move them down the pipeline. All right? Are you going to spend a lot of time with somebody who has no motivation and no equity? No. Right? You're going to put them in an autoresponder. You know, you're going to keep marketing to them because no lead is left behind, right? You never know. They might say, hey, you know what, to their cousin who's now going through a hard time. Hey, 6 months ago, I met this person, and they were super nice to me, and they educated me on what was going on, even though they couldn't help me. You might want to give this person a call. It's important. You put them in the drip campaigns, the auto sequences. You start following up with them every few months. You drip them with something, and I'll go over exactly how to do that. But motivation and equity. So we're looking for people that what? Want to sell, need to sell, or have to sell? Have to sell. That's the ones that are the simplified deals. The need to sell is still a great category. Want to sell is time wasters. Okay, you're not going to spend a lot of time with them. You're going to put them in the automatic follow-up campaigns and move on. All right? You're not going to try and lean over a cliff and force a deal. And you're definitely not going to be on the phone with them longer than 10 minutes. You're going to identify they don't have motivation, they don't have equity, or they have equity but they have zero motivation. I'm going to, hey, listen, maybe I'm not the right choice for you. Let me connect you with my investor-friendly real estate agent. And here's their name. They're great. Push the lead over to them. All right. So what for need to sell? What can we focus on? If they're not motivated enough to maybe take an all-cash offer, what else could we do? Yeah, terms. Get creative. Subject to transactions, lease options, sandwich lease options. We'll go over all this stuff when we go through our creative deal structuring talk. All right. So it's important to know your KPIs. All right. I mentioned before KPIs. Let's see here. Awesome. All right, so KPIs stand for Key Performance Indicators, and I'm just going to break this down. This is real simple for you guys. Can we get the board up on the screens? Is that possible to do that? All right, so this is very basic, and I just want to break this down for you guys because this is where we start. Whenever hopefully you guys are sitting down and doing this, setting 3-month, 6-month, and 12-month goals, right? You're actually putting pen to paper. You're committing yourself, all right? Maybe a great 3-month goal, and everybody's goals are different. Maybe a great 3-month goal is just to have as many breakthroughs as you can in their first 3 months. I want to talk to sellers and buyers. I want to get out from behind a computer and go touch some real estate and hang out with some people. I want to get to know my local market. I want to fill out a lead intake form after having a complete conversation with the seller. I want to actually write my first contract, my first offer. Maybe I just want to get my first offer accepted. Even if it's not a good deal, I just want to get that yes. Would those be major breakthroughs? Yes. That would be a huge opportunity to celebrate a little bit. So, that first 3 months is just maybe all breakthroughs. Maybe within your second 3 months, you're really focusing on, completing some deals. And you guys got to think long term. This is a sprint. This is a marathon, not a sprint. This is all about quick cash and dash. No, you got to really focus on, thinking about, wow, I'm building a skill set that's going to pay me big returns for the rest of my life and allow me to live out my dreams I'm not going to shortchange myself by setting false expectations of what I can accomplish in a short time period. Because for me, it took a long time. Personally, and I'm a freaking smart guy, and I work really hard. And it took me a long time, like 12 months, to break the code. Okay? So I'm going to go through these KPIs, and I'm going to just show you the fundamental understanding of how this thing works, and then we'll dive in a little bit deeper. Let's see if I can get here. So let's just say, and everything I'm going to talk to you is really conservative. All right? So let's just say we want to do our first deal. How much do you think we can make on our first deal? 5,000, 10,000, 20,000, 30,000. If you're from California, 6 million. Right? So, let's just be super conservative, and let's just say we want to make $5,000. Okay? That's a very conservative number, especially on a wholesale deal. We could do one deal and make $5,000. What's it going to take to get that deal? What do we got to do in order to generate one deal? We probably got to get some contracts accepted. Okay? How many contracts do you think we need to get accepted in order to have one deal closed for $5,000? 20? Damn. Let's be conservative, not that conservative, all right? Okay? On average, we realize not every deal is going to close. Not everything that we negotiate and get under contract is going to close. Not everything's going to be a good deal, especially when wholesaling, because our perceived value might be different than somebody else's. So let's just be conservative, and let's just say we got to do 3 contracts to get one deal. Okay? 3 contracts to get one deal. Now, in order to get 3 contracts accepted, how many offers do you think we need to make? 20, 30. On average, you got to write about 10 offers. You can do this in one day, by the way. It doesn't take a long time to write an offer. It takes us about 45 seconds. We've automated the entire process. Click a button, goes. Even with a cover letter and a proof of funds. I ain't messing around with you. I would never do that. All right, so we're being conservative here, right? Because we know we have to generate about 5 leads to make one offer. So with that being said, how many leads do we have to generate to get 10 offers that turn into 3 contracts to one deal that makes $5,000? Man, you guys are smart. 50 leads. My awesome handwriting. All right. Now let's just say, how hard would it be to generate 50 leads, do you think? Not very hard, right? Let's say we're doing direct mail. Okay, direct mail. If we're doing direct mail, how many postcards do you think you need to send out to generate 50 leads? Well, typical direct mail gets about a 1% response rate. Okay, typical direct mail. We have some direct mail pieces that get 7, 10, 12% response rates. There's some very creative direct mail pieces, but let's be conservative here. So let's just say it's a 2% response rate. So we got to send out 2,500 postcards, let's just call them. How much does 2,500 postcards cost? Let's just be conservative and say they cost 50 cents. Our postcards cost 40. Okay, 50 cents, 1,250. So I'm just going to go over here. So if it costs $1,250 to generate 5,000, what's your return on investment? 4x. Let me ask you guys a question. Would you invest $1,250 if you knew you were going to make 5,000? All day. to 4 times return on your investment. It makes a lot of sense once you start understanding the metrics and the numbers. Now, obviously, this is a simplified example, but this is pretty close to being based in reality, even though we were being conservative. And like I said, some of our systems and processes allow you to get much better response rates on your direct mail. So, as you're looking at your 3-month and 6-month and 12-month goals and you're starting to model everything out, understanding the foundational KPIs of your metrics in your marketing is going to help you guys base your goals in reality. Did this help? Help you guys see something? Okay. All right. Cool. You guys got that?